Hello and welcome everyone to the Capital Mind podcast. If you'd like to know more about us, visit capitalmind.in. And if you'd like to invest with us, do visit capitalmindwealth.com.
This podcast is for informational purposes only and should not be relied upon as the basis for investment decisions. Clients of Capital Mind may maintain positions in the securities discussed in this podcast.
Hello and welcome everyone to the Capital Mind podcast. You've heard my voice in the intro of every single episode, but this is the first time I'm here inside an episode doing it with Deepak Shenoy.
Hi Vashish, great to have you on the podcast. Great to have another fantastic podcast. Today we talk about something close to everyone's heart, we hope, which is the availability of credit and how we use credit cards and overdrafts and how basically make life a lot more simpler when you know everything and you can manage your cash flow better. Let's start with the concepts you have, Vashish.
So I'll have a lot of questions on what are credit cards, what are overdrafts, how you can use them, how you should not use them, so on and so forth. But first of all, saving money is hard. Do you agree?
I totally agree. I'm struggling with that myself.
How much money did you have when you were 30 years old?
To be honest, I was actually bankrupt when I was 30 years old. But of course, I there was a problem because I didn't think money was important at that time. But luckily, I was getting married, and to me, a lot of the things that happened at that time were simply because I had no idea how personal finances should be managed.
When I joined Capital Mind, that's the first time I started actually saving money because I used to work in non-profits earlier. They didn't pay much. So 2017, I was getting married and I had saved up some 4 or 5 lakhs, I think. And marriages cost money. And my dad was like, I'm paying for a lot of it, but I still need some money from you. And I was like, this is the first time I have money in my bank account. I really don't want to go see it go down to zero again. So that's when I learned about what's called overdraft from you and set it up for myself. And I had parked all my money in an ultra short-term bond fund, took an OD against it and still continue to have that OD. And it's come in incredibly handy over the last few years. And used that, and I could pay it back in the next over the next 3-4 months, and I never saw my savings go down. I know it makes no sense because net you still, your assets and liabilities would balance it off. But what it helps with is behavior and psychology. You don't feel the sense of defeat of seeing all the money that you've saved go down to zero. So that's one way of managing your cash flow. So that's how we're getting started. So why do we use credit cards and overdrafts and other such instruments? I think forget about points, forget about rewards, forget about playing games on cred for credit card points. What they basically help you do is manage your cash flow better. If you thought of yourself as a company, as a organization, they also use different tools to manage their cash flows. And you should think of credit cards and ODs as tools of cash flow. So first of all, Deepak, let's just break down what these things are in the first place.
Yeah, I think, this is a great thing that in fact, when I suggested it to you, I think I didn't have an overdraft myself. And then based on your experience, I think picked it up myself. But let's go back to the basics. You started off with, I've saved some money. And then you've got to spend something for the marriage. But if you spent it and you took out the money, then you would have no savings left effectively. But you don't want to do that because once that money has been saved, it's been saved in incredibly difficult amount of time. I mean, it's taken a lot of time and patience to build that money. So instead, you take this bond fund. You go to a bank and you say, if I pledge these units to you, will you give me some money? So they say, well, we'll give you some money, but you don't need to use it all at one point, right? So they might say, listen, I'll give you another bank account. This bank account will have a new bank account number and we'll give you a debit card against it. You can use it in internet banking. Anytime you use money in that bank account, that balance goes negative. So if the negative may be negative 10,000 rupees, then you get charged interest on that 10,000 rupees which you use. Tomorrow you make back that money. In this case, you were, I think your experience was that you took an overdraft for a certain amount of money. And then when you made that money back, you kind of paid it back. So if you paid the 10,000, you paid even 5,000 rupees back, you get charged interest further on only 5,000 and so on. This process allowed you to do this so that I can always draw from it, but my savings continue. So if I earn 8% on my savings and the overdraft is only 10%, I only pay an incremental 2% for the liquidity and only for the time that I need it. So in a way, you saved yourself taxes as well, because if you had, for instance, taken out the money and you had made a 20,000 rupee profit, you'd have to pay 30% tax on that 20,000 as well. And instead, here you might pay a 2% interest excess, which might only be maybe 1,000 or 1,500 rupees. So I think interestingly, the idea over here is two things. One is you create cash, you create a way to use your cash flow despite having the money to do so and to withdraw yourself. In a way, you're borrowing from yourself. The bank is earning that extra 2%, but the bank structure gives you the very important need to pay it back. Otherwise, you never pay yourself back, right? If you take away from your savings, when was the last time you said, oh, listen, I took away from my savings, I got to fill up my savings back to where it was again, and then only start further saving from there. But what has been your experience in the sense, has that changed your, I know that it's changed a lot of things from that perspective at the time when you started it off, but from then?
So from then, one thing is it enables me to continue my discipline of investing every month. For example, I had to go to a bunch of weddings in the family. Parents were here. We also took a small holiday with them around that time. So there are some months when you have lumpy expenses. And so if you say, for example, if you were making 1 lakh a month and you have a 1 lakh credit card bill, what do? Do you not save that month? You could hack the process by paying off that amount through your OD, overdraft, and just still continue to save. Maybe you can pay 50%, maybe continue to save, say 50,000 rupees. And rest you pay back your OD over time. So it will cost you a little bit of money, of course, but that is the cost of maintaining discipline in your investing. You can go horribly wrong with this also. So this is like a hack as long as you know the limits of it. My rule is my total outstanding never goes more than 2 months worth of family income.
Brilliant. In fact, for me now with kids, I have these mega expenses every 3 months, which is their school fees. I would prefer not to disturb or disrupt my entire savings procedure. Also save a lot of taxes in the interim. So for me, it's just easier for me to pay through that and then eventually replenish the money through my part of my system. So that's this is interesting. But I think another thing that it's done for you is probably built your credit history to some crazy levels, because you're actually using credit and paying it back on a regular basis.
Yes. So I just shifted to a new phone. My old phone had a lot of SMS spam filters built over years. I was on Android and just moved to iOS. There is no such thing here. And I keep getting all the spam that I was not getting so far. And now I see every second or third SMS is about a pre-approved loan, because probably my credit score has gone up. So now I have 3 credit cards. 2 of them are billed at the beginning of the month. One is billed in the middle of the month. So with this configuration, I can actually now get close to 45 days of interest-free credit for free, which I can manage easily. One more thing with credit scores is if you utilize a lot of your limit on the credit card, I think it impacts you negatively on the credit score. I'm not seeing any documentation about it, but I think I've seen it happen with me, and I've also in our discussions on our Slack channel with our customers, a lot of people discuss this. And what we've figured out is, as long as you're using less than say a third of your credit limit, it is positive for you. If you consistently use more than 60, 70, 80% of your credit limit, I think it impacts your score negatively. So you can have multiple cards, and if you space them out over the billing cycles, you can get extended periods of continuous interest-free credit.
Just as an aside, I think the problem really for a lot of people is, how do you get a credit card in the first place? How do you build credit history? But if you start off early, you use your credit, they will keep increasing the limits over time. And then over a period, you might get a 5 lakh credit limit, but you only use 1 lakh a month, which helps you stay sustainably under.
So there are tools you can use. So like my primary one with HDFC Bank, I now have a very high limit on it. But what I do is I go and put in net limits on it so that even if it gets lost or stolen or misused somehow, it's not a huge amount. So I usually cap my expenses to my monthly salary.
That's interesting. I use another hack. I have two cards where the second one, I actually request them not to increase the credit limit so that whenever I feel I'm going to a merchant which I don't trust, and perhaps the first time I've gone to a salon, I might find it. I don't know if it's going to be phished or used, So I actually use the credit card which has a much lower limit. So even if I lose, it will be relatively a smaller amount. It's actually got a 15,000 rupee limit. So I'm okay losing 15,000 rupees on a fraud, but I don't want to lose 5 lakh rupees on a fraud.
Also, you can do this with credit cards, but it's much more difficult to do it with debit cards.
Absolutely. In fact, one of the hacks of using credit cards is if you don't like the merchant, you should never use a debit card because they can take away all the money in your bank account and they can take it for a long time. I mean, you don't even know it's hacked today. They could do this 6 months later and 8 months later.
So this has happened to my parents. They went to Bombay for a trip, and I think their ATM card got cloned, and a lakh of 1 lakh something got withdrawn overnight. While they were traveling back to my hometown in Jamshedpur. And it took us the RBI guidelines say you're supposed to get the money back in some 90 days or something. It took us 6 months. So actually banks are keeping money in banks, I feel is a risky proposition. You could be extremely careful, but you can get conned, fished, something. There's a Paytm scam going on recently. Somebody shared their dad got conned like this, and you have to go and fight. In fact, I think you should increase friction in your bank account, as in don't have a lot of cash in your bank account because it's just liabilities. Anything goes wrong, you can lose that cash any day. Put it in mutual funds, put it in... what I do is I keep only the minimum balance. My bank must hate me for it. But I only keep the minimum balance there and maybe a little bit more. And everything else is moved to funds, mutual funds. And I have an overdraft if I ever need cash or any cash needs.
That's a brilliant thing. And I think where we are right now, the amount of facilities that are available to us, you pay for something using a credit card, you get a 45-day credit-free period, interest-free period, and then you pay back. But even before that, you can use some of these new VC fandangle things, right? And you've been talking about it.
So you can use Lazy Pay, you can use Simple, and you have Ola Money. They're giving you up to 15 days of interest-free credit again. So, for example, I use Lazy Pay to pay all my Swiggy bills, and then that set up an auto pay setup with a credit card, which goes and pays it every 15 days. And that credit card auto pay set up with a bank account, OD account, so it's always auto debited. So I don't have to do anything. But there are some concerns. So this card has a lower limit, so I'm not too concerned about it. For cards with higher limits, I would like to not have suspicious transactions, so I don't set up auto debit. But here's where app like Cred comes in so handy. It's made the process of paying your bill so easy and enjoyable that you can use that for that. I wouldn't use it necessarily for the points or rewards or the games that they have. It's fun. It was fun when it first came out, but I think the most utility is seeing all your cards in one place, seeing all your bills and due dates in one place, and doing the transactions from there.
Yeah. In fact, I think one of the things that we also have in this whole facility is this auto pay thing, right? So you've auto paid Lazy Pay through a credit card, you've auto paid the credit card through your bank account. But it's not usual, and we tell people to be really careful about this sometimes. So what's the downside of having this auto debit that might happen?
Yeah, I think that's the downside. If you have random fees applied to you by the credit card company, some suspicious transactions that you never actually did. So if you just keep auto paying every time and never look at the bills, you might be paying something extra that you haven't actually paid for.
Yeah, and actually what this comes up to a very interesting point. So once a long time back when I had a dispute so there was 1,000 odd rupees. So my bill was 45,000 and then I paid 44 saying I have disputed one. Now it turns out this is the worst thing you can do in a credit card is to not pay the outstanding. So it turns out that as soon as I did not pay the full amount, everything that I had assumed was interest free for that 45 days. So, my bill payment date is the 1st of every month. the bill is generated on the 12th. So the 12th of December bill will get paid on, say, the 1st of January. And on 1st of January, I didn't pay. Now, after the 12th, any transactions that I have done will actually attract interest as soon as I become did not pay the full balance as of Jan 1st. That means on Jan 12th, which is the next billing cycle, I actually get a bill that not only includes the interest on the 1,000 rupees I didn't pay, but it also includes all the spends that I have made that were unbilled. They also attract interest from the day they've been transacted on. So this is one huge don't in credit cards, and I think with the dispute mechanism in place, you should eventually expect a refund of it, but don't not pay. And it's just something I learned in the whole
So
process.
here's another interesting point, right? If you need cash, what happens? So if you use a credit card for withdrawing cash, I've never done this, but you know better. What happens?
Oh yeah, this is the actually same thing. So the minute credit card is used for cash. Now, how do credit card companies make money? Just when you swipe it at a merchant, they charge the merchant that 1% or 2%. So they make money. So you get your interest-free period, but somebody else pays the interest for it. But when you take cash, the ATM is not going to pay percentage as this thing. So you start paying as soon as that cash is withdrawn. So many credit card the concept or their application forms won't tell you this, but the minute you get charged for cash, every other payment also becomes interest bearing from that time or in the same way. So you start paying interest on all your spends apart from the cash spend as well, because now you've become so the way they work it out is that the minute you withdraw cash from a credit card, not a debit card, all your payments become due instantly. If you don't pay, that means now you're paying interest on all the outstanding that's available to you. And that is at 36 to 43% interest per year. It is a ridiculous amount of money. We'll come to, how much money credit card companies make later. But the 36 to 42% is not something you want to pay. And you don't even know you're paying it because you signed some agreement some years back. So simply don't withdraw cash from a credit card. If you use the overdraft account, the overdraft gives you the cash at a much cheaper rate. 10%. So it will actually, be a much more beneficial thing to use that rather than to use your credit card. I mean, even in an emergency, in fact, if you can, tell your credit company never to allow cash withdrawals, but they don't because they want to somehow find a way to.
You can actually put cash withdrawal limits on your credit card.
Yeah, I think some cards do.
Yeah, it depends. Like HDFC Bank website, I think you can go and do it. Net
yes,
banking.
they've in the net banking they have specific limits for cash and international spends, domestic spends, and so on. And I guess one of the things, certain things that don't work anymore, and we used to was, you have the lazy pay payable by credit card. Earlier, this should be Paytm that was payable by credit card.
Yeah, you could pay Paytm. You could add money in Paytm using your credit card. There was a point when you could pay Paytm using a credit card, then use Paytm to buy a mutual fund. So you would get 45 days of credit and then earn interest on that free credit. So it was nuts at some point.
Yeah, I think this whole sequence changed after they started charging. Paytm started charging, I think, they wanted to charge you a fee.
Yes, I don't think that works anymore, that trick.
It doesn't.
This was back in 2 years back, I think.
I think, so one of the things that I've learned is that in finance, the word float makes the maximum amount of sense. So the more float you have, the more time you have, money you have, on which interest is not being charged, the better it is for you in the long-term part of your life. And it's the same, I think on a personal level, banks like HDFC Bank make almost considerable amount of their interest income is because they get almost zero cost float. So whenever you pay, for instance, a certain bill, your income taxes go and sit inside an HDFC bank account. The HDFC bank account, the HDFC eventually pays the Indian government maybe 1 or 2 days later. That effectively gives them 1 or 2 days of interest-free money, and that at scale adds up. So why, as an individual, would you not choose to have interest-free money? Because if it works for the biggest bank, it should work for you as well.
So a couple more things on of using credit cards, more ways of using it. So we at Capital Mind, we do a lot of financial planning for our customers. We have wealth management clients and people. We just started on our RIA as well, where we are doing this. Shameless plug. One of the questions, one of the most usual requirements in a financial planning process is planning for retirement. And the the basic input for it is how much you spend today. And the answer to that is depends on how much you can recollect. So some people keep track of how much they spend. Some people just will have a vague idea of how much they spend. So if you ask somebody how much you spend, somebody will say, okay, I spend 50K a month. Fine. But that's their usual expense. That's rent and living expense and so on and so forth. But they also have some lumpy expenses which they don't, they don't add up and then divide by 12 to get a monthly expense. So one way you can use credit card for this is use your one credit card for all your daily usual expenses. Now you can even pay rent using credit cards. Red Giraffe, by the way, check it out. And for lumpy expenses, use a different credit card. So end of the year, all you have to do is just add up all your statements to see which were lumpy expenses, which were your daily normal expenses, and you'll have a fairly good idea of how much you're spending. And this is a good way of keeping track of your actual expenses going forward.
Yeah, I think you've said this, and I think I agree with you that, which expense tracking app do you use is probably...
I think that has never worked, at least for me. I have tried it several times. But is there any successful expense tracking app which has excelled at helping people track expenses? Mint started that. I think Walrus in India has tried that. So I don't know how much it works. It's not worked for me. It's like the analogy for it is probably calorie counting app. Never works. And you'll probably work for a month.
Yeah, after that you kind of suddenly realize that you're spending more time counting the calories than figuring out how to reduce them. So you here again, you need to calibrate your spending. You need to know approximately how much to spend. But if I tell you things like, dude, you're spending 500 rupees on coffee a month, and if you went to a Darshini instead of coffee day, you would spend 400 or 300 rupees. You'll probably look at me and say, dude, I like coffee day, or I like whatever I go. I just don't want to...
You're in Bangalore, man. The coffee has to be at third wave.
Oh, well, okay. I'm a little out of it right now. So
apparently, there's also third wave water now.
Even better. Just
Hashtag peak Bengaluru.
Peak Bengaluru. There you go. So there is, one of the other things that I found, especially in credit cards, is the younger folk find it very difficult to understand or get credit cards. So in the initial part, they pay. So, we've had a lot of discussions on this on Slack. Should I pay 20,000 rupees, 50,000 rupees for this fancy credit card? Or should I pay something for a zero fee credit card? What's your thought on this, Vish?
We're just discussing this with Shrey, who lived in the US for a while. And I think it works in the US where you have disproportional benefits of points, where spending $100 or $1,000 in dollars versus getting maybe a disproportionate amount in terms of miles that you can use. I don't think that has worked in India. I have tracked this in my first 2 years of using credit cards, and I used it for booking air tickets, and I still do. That's the only way I use my points. And the yield came out to be roughly 2.5%, and now it's gone down to about 2% of spending. But 2% of spending is really not that much. And if there's a cost to your credit card, it's like barely anything.
And really, so to be honest, the way they structure the points, you don't even know how much you're getting. So for instance, I have a card from HDFC. He tells me I get 12,000 points if I spend so much. And then I find out the 12,000 translates to about 1,500 or 2,000 rupees if I were to actually use it as store credit, which is the only thing that makes sense for me. So a spend of say 10 lakh rupees, which has given me 12,000 points, is equivalent to 2,000 rupees. That's 0.2%. Or if you get something higher, they'll charge you an upfront fee. They might charge you a 10,000 rupee fee and give you something worth for 14,000 rupees. Your net cost of 4,000, is it really worth it? I always struggle with this, and I said, okay, one rule of thumb, don't pay for a credit card unless the benefits are absolutely insane. And I haven't found that yet. So it's quite interesting that for every person, the credit card miles the concepts will be different. If you're a traveler, you'll find cards that work with you on a miles basis.
Yeah, you can hack the process. You can go and find something very optimized for your lifestyle. So, for example, HDFC Diners Black, it gives you some crazy reward points, and the new iPhone that came out had some crazy deals on it where you get some points and some cash back, and the cost will go down substantially for you. But should you be so focused on this in your life generally? And the richer you are, the worse of it's a waste of time for you to do all these things.
Yeah, I think the richer you are, the simpler the credit card you should just take and not pay for it, of course. Because the
Pay
richer
the
you
bills.
get, yeah, just pay the
Don't
bills.
pay a fees for the credit card.
Yes, I think that's a brilliant concept. So I think we also have right now, there's a SBI cards IPO that's
Yep.
going on. It's given us a bit of insight about the industry as well. So the interesting thing about SBI cards IPO is when you think about credit cards and you use them, you get this interest-free period and all that stuff. How much is the credit card company and why is the credit card company doing this for you? You're not doing them a favor by getting an interest-free credit period, because if you look at the SBI cards IPO, they have 20,000 crores or roughly outstanding. That was as of last year, that was 2019. They made 3,000 crores in interest and another 3,000 crores in fees. So out of this 20,000 crores, they've actually made 6,000 crores. That's 30%. Now, they're not doing you a favor. You're doing them a favor by using a credit card, right? So the industry statistics is insane in this case. And then credit card spends have grown. Total amount spent on credit cards today is roughly equal to the total amount spent on debit cards on a monthly basis. Although there are maybe 25 times the number of debit cards that are out there. So it's not unpopular it's not popular without a reason. But you got 70,000 crores or 80,000 crores being spent a month on credit cards. And yet that is less than 0.5% of India's GDP, per month. So if you think about it, credit cards are like a tiny part of the overall spend in the country. So it's still got a long way to go. So it makes sense to kind of optimize, because there'll be more and more that will come onto credit cards coming up, I guess.
So I think it's a simple tool. Use it for cash flow management. You can pair up credit cards with ODs. They go very well together. Another example is no-cost EMIs. Is there anything called no-cost EMIs?
That's a good point. So here's the thing. What RBI came about was a rule, and we have to understand the context behind this. When you buy something from Amazon and somebody offers you a no-cost EMI, nobody makes money out of a no-cost EMI, and nobody wants to not make money. So how does, say, a Bajaj Finance or one of these SBI cards type things make money out of this process? The idea is they work with a manufacturer. So for instance, a Samsung, an LG, an iPhone, an Apple, they will say, listen, if you guys get me a customer, then I will pay the whatever interest charges need to be paid and you can give that person a no-cost EMI. So something like, if it's a 50,000 rupee expense, the cost of a 6-month EMI, and when you're paying an EMI, you actually pay on a monthly basis. So you will actually pay something like 8,000 odd rupees per month for a 50,000 rupee EMI. So every month your principal outstanding reduces. So you don't think of 10% interest rate on a 6-month basis equals 5% equals 50,000 into 5% is 2,500 rupee interest. Actual interest is only about 1,200 rupees. So 1,200 rupees on a 50,000 expense, now there is two choices for the manufacturer. Samsung can say, listen, if I didn't give him an interest-free credit, he'd simply say, forget it, I'll come next month. 50,000 is too much. Whereas if you think about it as 8,000 rupees a month for 6 months, he's like, oh, well, I'll take that. So the push, the nudge for him to take it on is to get this interest-free credit. And if it costs Samsung 1,200 rupees, Samsung says, I'll pay, no problem. This 1,200 rupees might actually work out to be an 18% return for Bajaj Finance or for SBI cards, but you have no idea. Now, can you as a customer go and say, listen, 1,200 rupees, if Samsung is willing to pay the card company, why can't it pay me? I'll just pay lesser. No. So RBI actually came out with this rule that said, if you as a bank, now this is only for banks, if you as a bank do this and you say, I will reduce the amount of, I will basically have a reduced cost and then the EMI is on top of that, then you have to offer the customer the ability to pay that as well. So that means the customer should say, listen, I don't want interest, but interest free, but I'll pay a lower cost. Because of this, a lot of banks' loans are out of the ambit of the 0% interest free credit, but non-banking financial companies can do it. So there are two kinds. So there's something called HDB Financial, which is owned by HDFC Bank, but it's not a bank. It's an NBFC. So they can offer it. Bajaj Finance can offer it. SBI cards can offer it. But what cannot offer it is the bank itself. So an HDFC bank can't offer it.
So what they do, I'm not sure how it works. I mean, I just want to get clarity. I'm just pulling out my Amazon order history and I have bought something on EMI, no-cost EMI from using my HDFC card. And it says item, the value X, taxes X, total something. Then they say something called no-cost EMI discount. And that is probably the EMI that's built into my no-cost EMI.
Yes. So effectively, they give you a no-cost EMI discount, but your EMI is calculated as if the discount wasn't there in the first place. So if you have 25,000 rupees, that was a bill, they'll say the no-cost EMI discount is 800 rupees. So your invoice says 24,200. But you pay 25,000 divided by, say, 6-month EMI. So 25,000 divided by 6 is what you pay every month. So the bank or the financial institution earns 25,000. You pay 24,200 to Amazon. 800 rupees effectively over time goes to the bank. And of course, if there was a way for you to get that 24,200 without going through this no-cost to your EMI route, then I think you should take it. But they don't expose that option easily for you. So, well, it's like either I pay 25,000 with no cost interest for 6 months. And you should just take this simply because that 25,000 in a bank will earn you some interest. So it's just
another thing you can you'll see if you have bigger spends on your credit card is they give you an option to convert that spend into an EMI. But that will cost you anywhere between 13 to 18% depending on what kind of card you have. If you had an OD at 10%, you can simply pay the whole damn credit card bill through your OD and just pay the 10% on the OD.
Yes, in fact, what they don't tell you when they do this convert to EMI thing, sometimes there are these processing charges for that loan
and you have GST and you have other things on top of it.
So your 14% loan with say a GST and a fee of even 500 rupees might work out to 16-17% unnecessarily, whereas you can have a 10% OD against it. So you can convert anything you want to an EMI, not depend on the bank to do it for you.
All right, so let's wrap it up. Deepak, you had me make a list of do's and don'ts when using these things. So you want to go through them?
Yeah, let's do this. Do's. So use a credit card. Get yourself a credit card. Use multiple credit cards, one with lower and higher limits. Do use your credit card instead of a debit card whenever you have the opportunity or when you feel that you don't trust the merchant very well, because debit cards are much harder to recover money from. Remember also to ensure that you manage the limits on your cards efficiently so that you have different limits, different payment dates. One of the big don'ts that I really want to say is never not pay your credit card bill in full. That means always pay your credit card bill in full. Even set up an auto debit from your bank account so that you don't get charged late payment fees or interest charges because the interest costs are heavy. Never withdraw cash from a credit card. You always use a debit card. Do create an overdraft account with your investments. Your investments can be anything really. It can be your debt funds. Debt funds are the most efficient because they're very easy to do it. You can use your equities as well. So let's say you buy a Nifty ETF and you don't want to sell that Nifty ETF for the longest time. Keep that Nifty ETF, go to a bank and say, give me an overdraft against it. The bank will charge you. It's about 1,500 rupees a year or so. And that's a much more efficient way to ensure you never sell that investment for the rest of for as long as you have this loan. And this loan is available for any liquidity. So instead of selling the investment, you have the liquidity available to you. So create an overdraft and use it judiciously whenever you need for instant EMIs at a much lower rate. The EMI process is just to pay back your overdraft account whenever you require. This will actually create 2 different bank accounts for you, but it's actually more efficient. The last part that you should use a credit card for is, or you should not use a credit card for, is on Forex charges, because Forex is extremely expensive in a credit card. Use something like Neo, which is a combination of a debit card and a bank account and a debit card. Much more efficient, saves you nearly 3%. You will never be able to
Neo is the financial product discovery of the year.
For us, it's quite, I've been abroad 3 times now and it has been phenomenal because I can actually check the rates on the online where I'm checking the rates available and I'm getting literally that plus 1 paisa here and there, versus I get 60-70 paisa more on a dollar, which is nearly 1.5% on spends that are made through a credit card. So don't use a credit card for forex spends. Do use something like a Neo, and Neo is actually probably the best product in that time frame. And don't ignore your credit card fees. Check your credit card for random fees that they've added, and many times they will reverse them if they are unnecessary.
In fact, cred lets you analyze your statements, and so a lot of people are afraid of cred because it needs access to your email account. One way to get around to it is create a new email account, set up auto forwarding for all your bill statements to that email account, and give them access to that one single email. And then anyway, they have your credit history. There's nothing hidden. I mean, people think a lot about privacy, but if you are a credit card user, the credit bureaus know everything you spend on every single transaction you do. So, and it's available to anybody to access who is in this space.
Yeah, I mean, if you think you're private, you wait till you ask for your own credit card statements and you can see how much everybody knows about you. So they know the way you've spent, how much you've spent, what you've spent on. Today, credit scores are only used for giving you credit. In the US, credit scores are used for even for a person who receives, who's trying to rent an apartment. So your rent might actually increase, or you might have to pay a higher deposit if your credit score is really low. If your credit score is low, your employer might deny you a job at some point. So this will eventually come to India. I don't know when it will, but it makes sense for you to build your credit score. That means pay your credit card bills on time. Don't use too much of your credit card limit, in which case increase your limits to the point where you're using a lot lesser of them. And build your credit score judiciously. That is, don't end up with
Always pay in full.
Always pay in full, and always pay on time. Always pay even your personal loans, your EMIs. Don't default on them. Every default costs you time to make up in the score over a longer period of time.
All right, Deepak, thanks a lot. Fun discussion on something we keep discussing a lot on our Slack channel. I hope you guys found something useful in this podcast.
Great. Thanks, Vashisht. And thanks all for listening. Visit capitalmind.in for everything we have. Capitalmindwealth.com for our PMS and wealth management services. And comment. We are on Twitter. I'm at Deepak Shenoy. We are at capitalmind_in. Vashisht is at Upticker. And you've got Astute Aditya. He's also on Twitter. He's quite silently sitting in the background getting all this stuff recorded and coming to you. So thanks again. Thanks for listening.